Well, g'day and welcome to the Loan Market Richmond monthly update for March 2021. I hope you like my new high-powered graphics. Well, pretty strong, very strong start to the year. Most economists were talking about a solid year, a recovery year in terms of the property market. That's quickly become talk of a strong year. Unfortunately, I don't have the CoreLogic report yet. I had a look and couldn't see it yet. I'm not sure that it's up. But I would assume and believe that the monthly index for Sydney was about 2%, which annualised is obviously very strong. And now a lot of economists talking about strong growth this year. People are very cashed up, they've been cooped up, they want to make choices, they want to make decisions, and the tempo in our office has been really high. So we've had a lot of inquiry, a lot of people wanting to upsize, a lot of people wanting to leave the city and go to the country and regional areas. They want to make the choices that they regretted not being able to make sitting during lockdown, probably. So confidence is high, interest rates are still historical lows, and the Reserve Bank saying we see them being that way for a long time. Quite a strong statement from the Reserve Bank governor saying 3-4 years we don't see a change to rates up or down. The cash rate is 0.1%, which results in home loan rates fixed of about 2% and variable of about 2.5 to 2.8%. So that's probably the big messages. Trying to think what else is hot and big. Bank turnaround times are still an issue. Lots of lenders are struggling to cope with the demand and also still struggling to cope with the implications of not directly the Royal Commission, but several legislations that all stack up to leave a high level of responsibility on banks for due diligence of applications and a high level of them having to assess things like cost of living down to the last razoo. Not a problem to strong buyers, people saving, people with deposits, people with jobs. The market is actually very good for getting a loan. And we're finding lots of lenders that are very reasonable, very can-do, and very good for turnaround times. We have limited our lenders a little bit and had to reduce some of the ones we can support at the moment, given their turnaround times. An interesting little topic of the day is call-off periods. We've had a couple of times in this hot market where people jumping over each other to buy a property and the agent saying, let's do it with an unconditional exchange. Let's just sign, and it's just sign this 66W and we'll do it this way. Just caution on that, because even with a great, strong, fully assessed pre-approval, you're basically agreeing to put down 10% or obligation of 10% cash. So say for a 700,000 property, you're responsible for 70 grand deposit, whether you pay it in cash or not, should you sign with a 66W, like an auction. For strong clients, for well-considered clients, for people that are well into the market, that may well be okay. And I've had many clients I've said, look, it's super strong, we've done a credit check, it looks good. The more common person we help is a first home buyer, and it's really important to do a building and pest inspection. It's really important to make sure the valuation stacks up, especially if you're in a race to exchange, jumping over other buyers to put in big offers. The last thing you want, and we're doing a lot of 90% lending, the last thing you want is a valuation to be low, which would cause all sorts of problems. So the pressure situation, even an agent saying things like, we've taken it off the market, we're not doing an open home this weekend, we've accepted your offer, etc. Even things like that don't hold rigour, because the agent is obliged to take all offers to the vendor. So even if they're acting in best faith and trying to sell the property to you, should they get another offer, they do have to take it to the vendor. So that's an uncomfortable situation caused by a 66W exchange and basically having to delay when you can exchange and sign. We've had 2 clients in the last 3 weeks that we've had in this sort of race situation, and have been a very stressful time to the buyer. Yes, it's great for the vendor, they can pick and choose and wait, but they may well just lose buyers, because a lot of people I talk to, when we go through the mechanics of the due diligence, they just don't want to play that game. Anyhow, don't want to be negative, but 66W for buyers, not so good. Exchange with a call off when you have time to do due diligence is really recommended. And in my experience, when you exchange with a call off, there's very few purchases that fall over, that don't continue. So it gives calm, gives confidence, and a 10-day call off is common in the Hawkesbury. Anyhow, that's about it for the month. I hope you enjoyed some of this ranting and rants. Have a great month, and call me anytime. Would love a chat.